Welcome back to the channel ICT Traders. In this video, I'm about to show you a very powerful ICT day trading strategy. I call it the ICT day trading cheat. If you carefully follow everything I'm about to show you in this simple strategy, you're going to get at least 30 pips in a day using this simple strategy. So for those of you who are trying to pass a prop firm evaluation, or you're trying to build a small trading account, this is the exact strategy you need to do that. So let's get into everything about this simple strategy. But before then, I want to specially thank you guys for helping us reach 50,000 subscribers. And for those of you who are not yet subscribed, make sure you do that before you leave this video. And if you are new to ICT concepts, you are just starting out, I have a dedicated YouTube channel where I'm teaching ICT basics, intermediate and advanced. I'm going to arrange them sequentially so it can benefit you to become a professional trader. So make sure you subscribe to this new YouTube channel. The link to this is going to be dropped in the description of this video. So let's get back into getting this simple strategy properly. So the first thing we need to do in order to become profitable with this strategy is to have an understanding of what we call an overall order flow. That is the higher time frame order flow, and we're going to use the daily time frame as a case study. So getting our daily time frame order flow will help us to be able to trade in the direction of the institution. So we go to the daily time frame right here, go to the daily time frame and look at what is the daily time frame order flow, because that will determine how well we trade with this simple strategy. So we're not going to take so much data, because what we are looking for is to have an understanding of where the money is going. Obviously, from looking at this, you will realize that the daily time frame is in a bullish order flow. So look at this, price has been moving up from here, had a retracement, had a break of structure recently at this point, this exact level. Then price moved up to that place. How we know that this is a bullish order flow is the willingness of these candles to close above the previous day high. You can see this one closed above the previous day high, this one closed above the previous day high, this one closed above the previous day high, likewise this level. So this can give us an idea that the institutions are trying to go bullish. So what we do in the lower time frame is to only go in the direction of the higher time frame. So we'll drop down to the 15-minute where we're going to start this simple strategy. Okay, so let me just go back to where we're going to get this data so we can test them all one after another. So the first thing you will need to do once you get that correctly is to make sure that you enable your period separator or session break. Simply come to settings and enable the session breaks under events right here. Then click on OK. And then the second thing is to head over to indicators. Click on indicators and search for Asian range. It's supposed to be close to each other, so it's going to be Asian range and kill zones, this particular indicator by this guy. So click on it, and then this is the particular indicator that will appear on your chart. So why do we need this indicator? We simply need this indicator because we need to have a delineation of the Asian range. It is important for us to have that. That is what this indicator will do for us. Now, since we have established that our overall order flow, that is the higher time frame order flow, is bullish, the only thing we want to be doing in this market is to be buying until where the higher time frame starts going bearish again. So this is what I mean. You're going to take trade once in a day. This is not going to appear every day. There are days that you're not going to have a win trade, but this trade will give you at least 30 pips whenever it works, and then it has a win rate of at least 70%. So let me show you that. So what we want to pay attention to is to look out for the most recent area of liquidity, either above or below the Asian range. But now, since we are dealing with a bullish order flow, what we want to focus is the liquidity that is below the Asian range. Now liquidity resides either above equal highs or below equal lows. Any place you see a high or a low, there is liquidity there. So that means at this exact level there is liquidity residing. Okay, so we will look out for a sweep of liquidity below the Asian range since we are dealing with a bullish scenario, and then we're going to take trade to the opposing area of liquidity. So if we pick liquidity below the Asian range, we want to go bullish. Once we see that happen, and the time we expect to see this happen is before 7 a.m. London time. 7 a.m. London time, on or before. So you can simply go to UTC, that's on the time zone, and select London, that's UTC +1. So you can actually see the sweep of liquidity happen. You can see it from, let me just take this cross here. The sweep of liquidity happened here, and then our entry is around that exact time, 7 a.m. London time. So this is what we will get. Let me show you that in practicality. So in a typical trading day, once you come around, you wait for your Asian range to play out. This is what we are seeing. Your Asian range is playing out, and then you can actually see that price is sweeping the liquidity down into this order block, the previous day order block. It has swept liquidity. What we are looking for is to have an order block that will form at the end of this swept of liquidity. Let me show you what I mean by that. Or let me completely delete this guy and see where the order block will form. Now the order block is actually the last sell candle that has been traded through by the subsequent candles. It can take 1 or 2 or even 3 candles to engulf it completely. It is okay to be called an order block. So let me show you what that means. If we have this candle, and you can actually see that this has not closed above it, this has not closed above it, it can take more than 1, 2 or even 3 candles to close above it. That can still serve as our order block. That is simply what I mean. So what we look out for here is to see that this has been traded through. So this one is our order block now. So what time is this? Before 7 a.m. the sweep of this liquidity has happened, and this has qualified to be our order block because you can actually see that this guy closed above it. We need to see that a candle closed above it, and we can confidently call it our order block, this guy. So this one, the body of the candle closed above it. So we want to take trade from this order block. It is very simple and straightforward. So this is where we want to take trade, either at the tip, or you can decide to bring it to the middle, but it is better to take it from the tip, and your stop loss is obviously below here, and we said we need just 30 pips. We will target the liquidity here and here. Okay, 30 pips is what we are looking for. 30 pips is enough for us, and that is exactly what we are looking for. 30 pips right there. So this is simply what you would do every day when you come to your chart, and it is enough for you to have your 30 pips. Okay, you can grow your small trading account and you can pass any profit evaluation challenge with this simple strategy. So let's go to the next day and see how this setup will come in handy, and simply have that. Okay, the next day is here. Very simple and straightforward. Asian range, we are watching this to happen, and this is it. The sweep of liquidity came in at exactly that time, 7 a.m. sweep of liquidity, and this one also traded into the previous day. You can actually see the previous day order block, it traded into it. It gives us additional level of confidence. So we have swept the liquidity below here. This is the only thing we need to see, sweep of liquidity below, since we are dealing with a bullish overall higher time frame order flow. So this is our order block. Okay, this is our order block. Let's see to confirm that once we see price close above it, it is our order block. So what we do is to wait for price to come back to that order block, okay, either from the tip or we can take it from the middle. So this is a very big stop loss. It's quite okay. You can reduce your stop loss by even going to a lower time frame, maybe the 5-minute time frame, to get exactly the same setup. It must follow the same setup. So it's 30 pips. Let's see, from here to here, that is 30 pips. And if this trade goes in our direction, we have 30 pips exactly. And let's wait for it to come back and get us inside this trade. Yes, we're in the trade now, and we're going to watch it out. Pretty much straightforward. We have our 30 pips. Let's go to the next day and see. And here is the next day. So we are watching this happen right here. Okay, the next day is here. Asian range, sweep of liquidity below, and price traded into this level, another block. Now what we look out for is that time. Let's see, sweep of liquidity, this exact point. So at this point we can actually see sweep of liquidity. Now this is what happened right here. This becomes our order block, this guy. This becomes our order block, this guy, and we closed above this guy. But look at what happened. Let me show you that, because we want to see price come back into this order block, right? This is our entry, and our stop loss is just right below here, and our target is 30 pips. Let's see 30 pips from there. 30 pips is somewhere around here. 30 pips somewhere around there. So price kicked us out, and that is really what happens in the market. There are days you pick losses and you let it be. You let it be. That is how you grow your account. Even though if we play it out, we will see that subsequently price actually had a movement in that direction. But at that time, obviously, this is where you're going to get into the market. This is the reality of the market. Forget about me replaying it. That is the reality of the market. This is where you're going to enter the trade, because this retraced into it. So you let it be, because that is part of trading. And then we go to the next day and see again what is happening. It has happened right here. Okay, the next day again, sweep of liquidity below here. Okay, which one is our order block? Which one is our order block? Did we close above this last bearish candle? Let's see if we really did. Yes, we closed above it. Okay, we did close above it, and this is exactly where we're supposed to see it. We closed above it, and 15 minutes candle is what we are dealing with. We closed above that. It's very small, but you can actually see it. Where is your trade entry? Your trade entry is here. Very simple and straightforward. Your trade entry is here. Your stop loss, the entry is here, and your target is to target the opposing liquidity above here. This is where the opposing liquidity is. So let's see how it goes for ourselves. We are in the market now, right? And then, yes, we moved up to that place. Did we have up to 30 pips? This is less than 30 pips, but quite a decent trade. We could have gotten something in that movement. So this is a good trade too. We have seen how it has worked. It even gave you the 30 pips later. It came back to this area and gave you the 30 pips subsequently. So this is basically how you do that. Let's see the next day. Let me just bring it to the most recent data. I'm not interested in going through all the back testing time and again. Okay, so let's see this one. This one is somewhere here. The most recent price action. This was recently, last Thursday. Sweep of liquidity below Asia, or right here. Sweep of liquidity, and this is our order block right there. Let's see it. Let's see how this happened. We want to close above it. Okay, we've closed above it right here. Right here, we've closed above it. And our entry is just from the tip. This is our entry. Our entry is right there. Our target is 30 pips at least. Our stop loss is just below the order block. As price moves, if we did have that movement in our direction, we could have made our 30 pips because we could have entered right here. Price have actually came back to test that order block. So this is basically a very simple to do strategy. Go ahead and try it, guys. You can actually see how I've gone through everything, including the losses that you should be anticipating. But the most important thing is that at the end of the day, overall, you are definitely going to master this strategy. It's simple and straightforward. Anyone can do it. Nobody has to cajole you. This is how trading is being done. Make sure you follow through every single instruction I've shown you in this video. If you have any question, let me know in the comments. And those of you who have not yet subscribed to this YouTube channel, make sure you do that to the Bot YouTube channel, especially if you're starting out with the ICT concept. Thank you guys for watching. See you in the next video.